Hi guys, I'm Chad Larson, and I'm here to talk about MLD Core. Today is a focused overview of MLD Core and the philosophy behind how I manage core capital. This is rarefied air. I might be one of the only retail advisors in the country that happens to also manage a prospectus cleared mutual fund. But the goal here is simple. Explain what MLD Core is designed to do, why it exists, and who it is built for. Every portfolio has a core allocation. It is almost always the largest deployment of your capital. In most cases, core sits around 60 to 80% of your portfolio and is typically held for long duration with few changes. This means that core drives the outcome, not just the return number, but the experience through different market environments. Most investors spend energy debating satellite investments, but the truth is the core does most of the compounding and most of the damage when it is designed poorly. The mistake the industry makes is treating core like background infrastructure instead of the central engine of decision making. If the core is built as a default, then you are accepting default outcomes, even if the rest of the portfolio feels active. The industry default is to keep balanced portfolios closely aligned with the markets with peer portfolios. That approach reduces career risk for managers and makes outcomes look familiar, which is comfortable. The trade-off is that benchmark alignment rarely seeks excess returns and rarely requires real conviction. In practice, the portfolio often becomes a set of static ranges and guardrails that are rarely used in meaningful ways. The decision-making becomes limited because the goal is not to be wrong rather than to be right. This is not criticism of individuals. It is simply how most balanced products are designed and incentivized. If you design portfolios to hug the market, you should expect market-like outcomes. That is not a failure of execution. It is the expected result of the structure and the incentives. When priority is low, tracking error, and staying close to a benchmark, the portfolio naturally avoids decisions that create meaningful differentiation. Over time, returns cluster near category averages, and any excess return becomes incidental rather than intentional. The investor may feel like they've hired active management, but what they've often received is a packaged default that is hard to justify any active fees. The core question for investors is straightforward. Is your core allocation being managed with conviction and discipline, or is it simply being maintained? We do not believe core capital should be managed on autopilot. Markets change. Risk conditions change. Correlations change. The opportunity set changes. Static allocation assumes the world is stable, but investing is a moving target and the environment does not cooperate. Our view is that core should be able to adjust when the facts change while still remaining balanced and disciplined. Balanced risk does not require static allocation. It requires disciplined process and the willingness and conviction to act when conditions warrant it. Be fearful when others are greedy. Be greedy when others are fearful. These are basic principles. I've made a career out of having what I call a very high IQ, and it's not intelligent quotient, it's implementation. Risk is inherent. It's everywhere. You cannot eliminate it. You can only decide where you are taking it and why. The real decision is risk positioning because positioning determines the quality of the opportunity and the shape of the outcome. Returns are not evenly distributed. Some risks are well compensated, some are not. And that changes through cycles. Many balanced portfolios accept risk passively, which means they accept whatever the market gives them without asking whether it is priced attractively. MLD Core is built to maintain balanced risk while deliberately positioning capital to pursue better compensation for risk. This is not about predicting every short-term move. It is about allocating capital where the reward profile is more favorable. MLD Core uses active allocation inside a balanced portfolio structure. The goal is not frequent trading. I say portfolios can be like bars of soap, and the more you play with them, the smaller they can get. The goal is deliberate capital allocation with discipline. We start with a diversified exposure across asset classes, so the portfolio is not dependent on a single outcome path. We dynamically position as the opportunities change because the best opportunities are not permanent and the worst risks are not constant. We manage risk within defined parameters so the portfolio stays balanced and investable through different market regimes. The difference is simple. The guardrails stay balanced, but the positioning is intentional, and that intent is what creates the potential for excess return. MLD Core is our allocation discipline applied directly to the core capital that drives most investor outcomes. The mandate is straightforward and it has three parts. Maintain balanced risks so the portfolio remains a true core holding, not a tactical side position. Actively position for opportunity because the core should not be left unattended when conditions change. Remain disciplined across market cycles, meaning decisions are driven by process, not headlines or emotion or short-term noise. This is not an overlay. It is a core allocation designed to be held long-term, but managed intentionally rather than passively maintained. In 2025, MLD Core delivered category-leading results within the tactical balanced category. I want to frame that properly. It reflects disciplined allocation in an environment that rewarded it and is evidence of a process, not a promise. In 2025, the portfolio returned over 34%, heads, leaps, and bounds aside from its competition. And since inception in 1, 3, and 5 years, has remained top decile. We also think about performance with the right time horizon because core is not a one-year product. 1 year can be luck. 3 years can demonstrate consistency. 5 years reflects a process, but since inception is proof. The point is not to win a single calendar year. The point is to build something investors can hold with confidence over time. This slide here is to show behavior over time because it is what core investing is about. You're looking at the growth of $100 over the full period with MLD Core compared against the category line shown on the chart. The key takeaway is compounding. Small differences in decision-making become large differences in outcome when the holding period is measured in years. The role of the core is not to look perfect every month. The role is to deliver a durable experience that can survive stress and still participate in opportunity. Investors do not fail because they pick the wrong fund. They fail because the structure does not hold up when markets shift and they are forced into reactive decisions. I focus on building a core that supports good behavior, reduces unforced errors, and stays aligned with long-term objectives through different environments. Fit matters. Alignment matters. A good strategy in the wrong hands becomes a bad experience. MLD Core is designed for investors who use a balanced allocation as a long-term foundation, not as a short-term trade. It is for investors who value deliberate decision-making over default setting and who understand that active positioning creates periods of differentiation. It is for investors who measure success across full market cycles, not short windows, and who can stay patient through periods of relative underperformance. It is not designed for investors who chase recent performance, demand constant market exposure, and react to short-term market movement. If someone wants autopilot and benchmark mirroring, there are simpler options. This is for investors who want their core managed intentionally and with purpose. MLD Core can be used as a standalone balanced allocation. It can also serve as the foundation within a broader MLD relationship. For many investors, the core allocation is the starting point because it sets the risk posture and the decision framework for everything else. When complexity rises, business assets, real estate liquidity needs, tax exposure, and family priorities, the core has to fit into a larger system. Minimum investment and fee considerations apply outside of full MLD client relationships, and those details can be discussed in our initial conversation. The important point is flexibility of use, but consistency of philosophy, disciplined, balanced, and intentionally managed. If the fit is right, MLD Core is designed to be your long-term holding that integrates cleanly into the full wealth picture. The next step is a conversation. It's not a sales process to force a product fit. MLD Core is not appropriate for every investor, and we are intentional about being clear on that up front. In this discussion, we cover objectives, constraints, risk tolerances, time horizon, how the allocation would be used within the overall portfolio. We can also address structure minimums and practical implementation details so the expectations are clear. If it fits, we can get specific quickly about how it would be positioned and what role it plays into your full allocation. If it does not fit, we'll say so because the outcome depends on alignment as much as it depends on process.